Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Anthony Gillham, co-head of multi-asset for Old Mutual Global Investors. Hi Anthony.
Morning, Emma.
So you're here today to give your 3 fund picks. What's the first fund you'd like to highlight?
Well, the first fund I want to talk about is the Wells Fargo Short-Term High Yield Bond Fund. Now, this is a very interesting fund because I think it encompasses a number of really attractive characteristics, a number of attractive opportunities in the market that our clients can take advantage of. The first is, as the name of the fund suggests, the fund is focused on shorter maturity, so low maturity bonds issued by sub-investment grade issuers in the United States. Now, after the problems that we saw in some parts of the high yield market in the US last year caused by falling oil prices, this has really had quite a big effect in terms of contagion, forcing prices lower for much of that asset class. Now, what the Wells Fargo Short-Term High Yield Bond Fund aims to do, or is able to do rather, is to take advantage of some of those price dislocations, so buy cheaper bonds. But because it's a shorter maturity emphasis in the portfolio, actually does that in quite a safe way. Now, the gentleman who manages that fund, Thomas Price from Wells Capital, an industry veteran, he's been doing this since the mid-90s. And in his own words, he looks to pick the safest bonds of the market. So for us as investors, that's, I think, a really good opportunity because it allows us to benefit from both attractive low prices, but to do that in quite a safe, low volatile way.
So a fixed income fund, what's up next?
Well, the next fund I want to talk about is actually an investment trust. Being multi-asset managers, a slightly perhaps different focus, be interesting to talk about. I want to talk about the Sequoia Economic Infrastructure Fund. Now, this investment trust is actually focused on a different area of the market. Actually, a number of interesting opportunities right there because actually a lot of the opportunities arise from some of the dislocations that we've seen in the European banking sector. Banks in Europe find it very difficult to lend at the moment. They're quite capital constrained. They've still got a lot of bad assets on their balance sheet from the run up to the financial crisis. But that actually creates an opportunity for fund managers and for investment trusts like the Sequoia Economic Infrastructure Fund because it allows them to lend to areas of the market that were perhaps the preserve of the banks in the past, but actually now, because the banks are capital starved, well, they can't invest. So there's some really exciting risk-adjusted yields to be had in this part of the market. Now, specifically, what the Sequoia Fund does is it lends to infrastructure projects. So it's a good market opportunity that the banks aren't lending to at the moment, but also it gives us a slightly different flavour of investment returns. Exposure to the debt of airports or seaports, railways, toll bridges, toll roads, the types of asset that probably aren't captured in your traditional equity or corporate bond exposure. So I think a really exciting opportunity for us at the moment.
And the third and final pick?
The final pick actually is one that's quite close to home. So an old mutual fund actually that is run by some of our colleagues on the global equity team. It's called the Old Mutual Global Equity Income Fund. And again, as the name suggests, this is a portfolio that's quite traditional in many senses, insofar as it's a long-only global equity portfolio. But I think there are a number of really interesting twists that make it suitable for our portfolios. The first is the income angle. So as your listeners may know, income's pretty difficult to come across these days. And what the Old Mutual Global Equity Income Fund aims to do is to generate 1.3 times, so 130% of the income that's available from global equities. So it's quite attractive, I think. The other interesting thing about this portfolio is that is the investment approach that's taken. The global equities team at Old Mutual is a quantitatively based investment team, which means that they use different tools and models, lots of quantitative numbers analysis, if you like, in order to come up with their investment ideas. The number of advantages to that. It allows them to really scour the investment universe. I think the universe for this team is 3,500 stocks, so it really is scouring the world. But it also takes human emotion out of the decision-making process. And a lot of the work that we've done in the team really has suggested that sometimes the human factor, well, it really does expose you sometimes to making suboptimal decisions. Well, of course, a quantitative process doesn't necessarily have those pitfalls.
Anthony, thank you very much.
Thank you very much.
This is Emma Wall for Morningstar. Thank you for watching.